As I mentioned at the start of the video, the Simple Markets community has 100,000 trades of data on our strategy that we use. It is the most data-backed strategy in the trading space. And the most important part of that is testing the different variables to really optimize that plan as a team. All right, ladies and gentlemen, welcome back to the Simple Markets channel. My name is JB. Obviously, if you haven't noticed already, we do have a face cam going today. I'm going to be trying to do this for future videos. Obviously, I'm going to have to work on my background, my lighting and whatnot, so it's not going to be perfect. But today we have a pretty interesting video for you guys. So we're going to be going over some data here submitted by our member Ricard. For those of you that don't know this, in the Simple Markets community, we have something called the lab. And the lab is basically a channel where it allows our students to submit different tests of data. And more specifically, this data goes over certain parts of the trading plan and things that we feel like we can improve or work on. So many of you watching the channel do know that we use a 0.75 fib level for our trading strategy. And what Ricard has actually done here, he's gone through 3 different years, 2020, 2021, and 2022, and gone through and collected data on different Fibonacci levels to essentially see which level and even which take profit is optimized for the trading plan we use. Now, I don't want to brush over this because this is actually extremely important, but having a channel like the lab has been absolutely huge for the community. We have 156 members, and at the current moment, we essentially are able to work as a whole team, all of us trading the exact same strategy with 70 of us being funded. Instead of you out there being a solo operator, working on your current trading strategy and optimizing it yourself, as a community, Simple Markets can work together and have a channel like the lab where we can submit data and kind of work on the strategy as a whole. This is part of the reason we have over 100,000 backtested trades of data on the trading strategy we use. And I highly recommend trading as a team of nearly 70 funded members, all using the same exact trading strategy. It is a massive advantage to you in your trading to be involved in a community like this. But without further ado here, we're going to pop open his document here and take a look at some of the data. So just for starters here, he does have a summary tab, but we're going to hop over to the data tab specifically, and I'm going to kind of break down the data in the different metrics that he looked at. So number one here, he used the 0.67 fib level, which essentially just gives you a fixed 2-RR ratio per trade, and he would break even at the higher high or the higher low here. He also backtested the 0.75 level, which is what we currently use, but he did that for all 3 of these, and I'll explain the differences. So for the standard trading plan that most of us in the community use, we do break even at 1-RR. He then showed a metric where we don't use break even at all, and then he showed another metric where he would break even at the higher high or higher low, and he would actually extend the fib by 0.25 and let the trade run 1 extra RR. That's why we're seeing 4R here, 3R, 3R, and then even up to 5RR. He would have the entry level at 0.8, and then he would go and extend the Fibonacci here, still using the 0.8 as the entry, but extending the TP enough to get 5RR instead of 4RR per trade. Now, I know that was a little confusing, a lot of numbers thrown around there, so we're going to pop open a trade image here, and I'm going to give you an example of what he did. So we mentioned the first one was the 0.67, and essentially what he did here was he would set his entry at this value level here, and then he would extend his TP by 1 extra RR per trade, which is kind of why instead of closing out at this low, you could see this 0.32 level down here, giving him a total return of 3RR using these black line metrics here. Then he went ahead and had these light blue lines here, which is the 0.75 entry model that we typically use, but he gave it a few different options. Number one, he would use no break even, so the 0.5 did not matter, and he would just let this trade run all the way to TP, making a 3R gain here. If he did use the break even, it did not affect this trade, so it was also a 3R gain. And then last up is that last option we talked about, which is where he actually extends the Fibonacci by an extra RR. So in this case, 0.75, an extra RR there would be worth 0.25. It's a negative because it has to be below that 0 value here for TP. And in this scenario, it worked out, and he actually did secure the 4RR gain here by letting it run that little extra longer. And then last but not least, he used that 0.8 entry level here, and you can see we just barely tagged in there, but we did get the entry. And then that eventually ran overall to that once again extended RR level of 0.2, giving him a total return of 5RR on that position, which is absolutely huge. So hopefully this trade image kind of clears it up for you guys here. I think it's a really cool idea. I love the logic behind extending the Fibonacci and extra RR, because I do find myself that most of my trades run a little bit beyond that take profit as well. Of course, guys, the most important part of this is keeping it mechanical. Do not be the person that continues extending the fib lower and lower. Do not be the person that changes these values around. You are better off as a trader having that peace of mind in the consistency, knowing exactly where you close, exactly where you enter, and exactly where you're going to break even. But we're going to hop back over here and actually take a look at some of the data and the results from his actual testing and see kind of how they affected the RR overall. So as we can see here, there's once again those 5 options. These 3 on the left are going to all be the 0.75. He left out the 0.67 because I think he realized it was a point of diminishing returns. You can see pretty clearly here it far underperforms the other variables in the strategy, so he left that one out. So number 1 is going to be breaking even at 1 RR. Now this is what we currently do, and you can see it returned about 22 RR here. He then removed the break-even rule, and that net about 40 RR in this scenario. And then he went ahead and did that fib extension that we talked about to get a 4 RR per trade, and that actually net 46 RR in this scenario, extending above both of the other previous 0.75 entries. And then very clearly here, the 0.8 level and the 0.8 with the extended fib both highly performed over the other ones as well, giving a pretty clean and consistent view that yes, the more refined your Fibonacci level is, and yes, if you extend your profit per trade, it is very likely that you will see that slow and consistent gain. Now, there's a few things to keep in mind here. He does trade a lot more aggressive than I do myself. I believe I averaged out the number of trades that he took here, and it was about 330 trades in the course of these few years. And for those of you keeping up with myself and my trading, I had about 164 or 163 trades in 2025. So he is a lot more aggressive than myself. Now, we do a lot of different data collection in the Simple Markets community. We have a lot of different students. Anybody who trades aggressive or conservative have both proven to be highly profitable with both different methods. A more aggressive approach will take more chart time, but you will actually return more in the longer run. For someone like me who's very conservative, but then you guys see me risk 2% to kind of make up for that lower growth in the long. So I'm able to be more conservative, be on the charts a little bit less. You guys know I travel a lot. I like to take a lot of vacations. So to kind of couple that and close that gap, I risk 2% per trade to increase my overall returns per year. So I can still keep up with some people who are on the charts more or trading very aggressive. Now, I think it's important to understand that because there is other data that we have done supporting break even versus no break even. And we have personally found that if you have a more aggressive approach, it may be beneficial to you to actually remove the break-even rule from the trading plan, as those smaller trading ranges in price action may actually have a smaller and more refined entry, meaning it's very easy from a volume standpoint that price can run to 1 RR and then back to your entry and then continue towards TP. It's a lot more likely on those smaller, more aggressive trades, so we have found data supporting that removing the break-even rule when you are a more aggressive trader, for example, say over 250 trades a year, you may have some benefits in that. On the contrary, the data shows that if you have a break-even rule, as someone like myself who trades a little bit more conservative with less repetitions, like I said, around 160 in the previous year, the break-even rule can actually be beneficial for someone like me trading more conservatively. Now, this is of course based on much longer-term data. As I mentioned at the start of the video, the Simple Markets community has 100,000 trades of data on our strategy that we use. It is the most data-backed strategy in the trading space. And the most important part of that is testing the different variables to really optimize that plan as a team. And especially everybody trading the exact same plan as a team, it is very, very important. So keeping these different things in mind as we go a little further into the next few years here. Now, 2021 did perform a little bit differently. We don't see a very clear and consistent climb here. We actually find that that 0.75 level seemed to work the best in 2021. If you used a break even at 1 R like we typically do, you would still return about 21 RR. Still being the lowest out of the bunch in this scenario. And then it was actually a 50% increase to the next level if you remove that break-even rule, which is absolutely huge. And then once again, we take a pretty significant step up if you go ahead and extend that Fibonacci to an extra RR, collecting 4 RR on winning trades instead of 3. However, in this point here, we found that if you move to the 0.80 and you have 4R, it didn't perform as good in this year, netting about 31 versus 33 RR here compared to the 39 if we just used the 75 fib with the take profit extension. And last but not least here, Rickard tested 2022, and he found that you gain about 39 RR if you break even at 1R. And then once again, an astronomical gain here by removing that break even rule for him, which by far shows that for his trading style, it is significantly beneficial to not use the break-even rule. And if you actually look at Rickard in his trading currently, he did remove that rule in his live trading and has been absolutely killing it. This is the key to data, guys. He has gone and taken the data that he collected, made a shift in the plan for his favor and based on his trading style. And Rickard has started off 2026 with a 60% gain absolutely astronomical. That is literally like half of the RR I made in the previous year. So that is insane. And clearly, as you can see, confidence in your data, confidence in your trading style, and backing it with data-driven decision-making is absolutely huge for yourself as a trader. Not only in backtesting and the hypothetical spreadsheets, but actually when you apply it to a live account. 60% gain on his live broker. That is a disgusting amount of gain for 2 months of this year. Now, next up, he found once again a huge increase by extending that Fibonacci tool and increasing the TP by 1R. This so far, based on this spreadsheet, has been one of the most proven metrics that we can see, where if your trade is already running, extending that TP by 1RR can actually be extremely beneficial to securing some extra profit on your account. And then as you can see towards the end of the data here, the 0.8 level actually showed if you extend that TP to gain about 111 RR, which is astronomically outperforming previous years here in the data set. And then last but not least, we'll just hop over here to the summary and kind of get an idea of the different ratios of RR based on the rules that he used. So number one being that 0.67 level, he very quickly kind of wrote that off. As you could see, the gains do significantly decrease there. And now comparing the 0.75 entry levels, the no break even versus the break even, you could see a pretty significant gain here. Just about 90 RR of a decrease if you go and add the break even rule based on his trading style. And then on the contrary, a 50 RR increase when you go ahead and extend that Fibonacci by 1 extra level for your take profit, just essentially scalping out a 1 extra RR per trade. And then you can kind of see here, I would consider these last two variables to kind of reach that point of diminishing returns, where although the 0.8 level can be advantageous in certain years, as we saw in the previous data, overall as a whole, it doesn't seem to be performing any greater than the 0.75 level with the extended fib. So based on this extensive data that Ricard collected, we can pretty easily conclude that extending your Fibonacci by an extra 1 RR could be extremely beneficial to our trading plan in the Simple Markets team. But we also kind of concluded that the 0.75 level does seem to be very optimal here, comparative to the 0.8 level, which didn't show much greater returns, and then the 0.67 level, which really did show an underperformance. And then last but not least, of course, we do see that if you are a more aggressive trader, once again, it reiterated kind of the idea that we already had based on other data sets in the community. But if you are a very aggressive trader, it may be better for you to actually remove that break-even rule and see how your performance does then. For someone like myself, I will be keeping my break-even rule because I do trade more conservative. But I do think this idea of the fib extension is really interesting and something I can maybe look into. So once again, thank you, Ricard, for the data and submitting this into the lab. It was really nice to look at. I did a webinar on this as well. Thank you everyone for watching the video. I hope you like the face cam. I'm going to definitely work on my lighting a little bit in the background in future videos. I also need to get comfortable talking in front of a camera or two-way camera, but I hope you guys appreciated the content today. If you liked today's video, drop a like on it. It lets me know what content to make in the future. Subscribe to the channel if you haven't already, and I will see you all on next Monday's video.